Hello and welcome back to another episode from the My NHS Pensions podcast series. The aim of this series is to break down the NHS pensions topics, help you make sense of your NHS pension, and also to help you plan for retirement and find out all the information that you could need. My name is Verity and I'm the host of today's podcast. Today, I'm joined by Angie, who is an NHS pensions expert, and Darren, who is representing our NHS pension scheme members and has questions on their behalf.
So I appreciate that being in the pension scheme and saving for the future is really important, but I can't help thinking in the short term about the cost of living pressures that are on everybody at the moment, and what are the benefits of me actually staying in the scheme?
So there are a wide range of benefits to being a member of the NHS pension scheme, obviously, as well as getting your pension at retirement, which does increase with cost of living. Your family will be eligible for death in service benefits. Any contributions that you make will be tax-free. When you retire and we start to receive your pension benefits, you'll do so for the rest of your life, as this is guaranteed by the government. You also get the option of taking a lump sum when you retire if you wish to do so. That could help you with larger payments like paying off a mortgage, for instance. The scheme also offers early retirement and ill health retirement options. And finally, you can make additional contributions as an active member to increase the value of your pension.
This sounds like there's some good options out there and that this is a really secure pension scheme to join. If you had a member who is looking at opting out, what would you say to them? And what would they be giving up if they opted out of the NHS pension scheme?
So, first of all, you're right. The member would lose benefits that we've described if they were to opt out of the scheme. But I think it's important for members who are considering opting out to ask themselves a few questions before they do so. First of all, have they saved enough money? They may be saving money, in the short term, but can they afford to opt out in the long term? It might be worth thinking ahead to your own retirement and considering how much you'd need to live the lifestyle you want to live when you retire, and then work backwards from that and calculate how long you'd need to be in the scheme to grow the pension that you would want to have at retirement. I mentioned if you were to become ill and you could no longer work, but you still needed an income to live on, your pension benefits would support you if you had to retire early due to ill health. And another benefit of the pension scheme is death in service, which provides financial support to your beneficiaries and which you won't have if you decide to opt out. So you'd need to consider how your dependents would survive financially in that situation. Also, you need to remember the longer that you contribute to the scheme, the bigger your pension will be at retirement.
Thanks, Angie. I think that's really important for people to understand as well. Ultimately, if they are planning to opt out, have they got a backup plan for retirement? How are they going to be able to sustain the lifestyle that they want when they reach that retirement age? And it's not just their pension that they'd be giving up, it's all those family benefits you've mentioned, and we are going to touch on that further down the line on the podcast. So now we're going to work our way through some questions. I know that Darren is bursting with a few more questions, so I'll hand over to you.
Thanks, Verity. I was quite interested in the lump sum that you mentioned earlier on. I could see that being really useful to me in the future, especially in retirement. So I was wondering if you could tell me a little bit more about how that works, please.
Of course. You do have the opportunity to create a lump sum at retirement, which is also known as pensions commutation. So for every £1 of your annual pension you exchange, you will receive a £12 lump sum. If you have membership in the 1995 section, you will receive a mandatory lump sum, which is usually 3 times your annual pension amount. However, for the 2008-2015 scheme, where there is no mandatory lump sum, you do have the opportunity to create a lump sum, and it is entirely your choice whether you choose to opt for a lump sum or not within the 2008 and 2015 schemes, but you wouldn't make that choice until retirement.
Angie, can you choose to take all your pension? Could I opt to give everything up for a huge lump sum?
So no, there is a maximum permitted lump sum that you can take, and that's 25% of the capital value of your scheme benefits. To find out more information about how you would calculate your capital value, you can head over to our website in the Member Hub, where we have more information on that.
Great, thanks for that. It sounds like a really great benefit, but would you mind just talking me through how that works so I can understand it a little bit better, please?
Yeah, so in our example, the member has an annual pension of £8,921 and a mandatory lump sum of £26,763. This member could take a maximum lump sum of £47,787, and the member would have to exchange 1,752 of their annual pension in order to do this. Therefore, the member would then receive a reduced annual pension of £7,169, but an increased maximum lump sum of £47,787.
You don't have to do this though, do you, Ange? You don't have to take the maximum. You could just take your standard lump sum and your pension wouldn't be reduced, would it?
No, that's correct. You don't have to take the maximum lump sum. You could decide to have a lump sum figure somewhere in the middle, as long as the amount is divisible by 12.
Great. And the amount that we're seeing these figures here that you're pointing out, say they've got a reduced annual pension, that reduction is permanent, isn't it?
It is, yes. So looking at the 2008 and 2015 scheme benefits now, the member in our example has an annual pension of £11,894 and they could take a maximum lump sum of £50,974. In order to do this, a member would have to exchange £4,247 of their annual pension. Therefore, the member would end up with a reduced annual pension of £7,647, but with a maximum lump sum of £50,974. As I said, it is completely your choice to make a lump sum for the 2008 and 2015 scheme benefits. And as mentioned previously, you don't have to take the maximum. The lump sum figure amount just must be divisible by 12.
And are these lump sum choices we're talking about here tax-free? Because in one of our earlier podcasts, we talked about that standard lump sum you can take without any reduction, and that was usually tax-free. So where do we stand if somebody's choosing to increase their lump sum?
So for all schemes, the amount of tax-free lump sum that you can take is governed by a limit set by HMRC, and any tax implications are also subject to your individual circumstances.
Thank you. I'm going to move on now to a different topic, and it's still a great benefit of the scheme. It's the death in service benefit. So lots of our members have asked questions about what the death in service benefits are payable to their family in the event of their death. So could we go into that in a little more detail?
The NHS Pension Scheme provides pension and lump sum benefits to your eligible dependents in the event of your death.
When does the cover start, Angie?
So you're automatically covered by the scheme's life assurance benefits from the day you join until the day you opt out or leave, and also following your retirement. The benefits payable will depend on the circumstances at the time of your death. The lump sum payable upon death when in pensionable employment is usually twice your actual pensionable earnings, but there are variations depending on what type of member you are. Your lump sum will be automatically paid to your spouse, registered civil partner or scheme partner in the event of your death. However, if you wish for this to go to someone else, you will need to make a nomination. In order to make a nomination, you can head over to our website. Alternatively, visit the My NHS Pensions portal, where you can make some changes and self-serve that information on your own.
Thanks, Angie. We'll talk more about nominations later because we have some questions lined up from Darren on behalf of members all about nominations, how to make them and who members can nominate.
So firstly, could you ask what benefits will be paid to a dependent adult?
The initial adult dependence pension is payable for the first 6 months at the rate of your pensionable earnings. It's payable in the event of the death of an active member. Following the first 6 months, the amount received will depend on your individual circumstances at the time of your death.
Angie, who pays the initial dependence pension? Because if a family is going through something as traumatic as that, they might not look at the lower level details, but it would be handy for members to know who picks up that initial 6-month payment.
So that would be paid directly by NHS Pensions. The lump sum is not normally included in an HMRC inheritance tax assessment if the payment is made to your legal spouse or registered civil partner. If the payment is made to a nominated person, qualifying scheme partner, or to a member's estate, then the lump sum will normally be included in HMRC inheritance tax assessment. If you do nominate someone, the recipient or child's guardian should check with HMRC if the payment should be included in the HMRC inheritance tax assessment.
There's some really useful information there, Angie. Thank you very much. Darren, have you got any other questions for Angie about the sort of benefits that might be payable?
Yeah, so could I ask about children? What about dependent children? How does it work for them?
So a child's pension may be payable in the event of a death of a member. It depends on the circumstances at the time of your death, and the pension can be paid to anyone caring for the children or to the children themselves if they look after themselves.
And what is a dependent child? So people on the podcast might be hearing this term and thinking, is there an eligibility criteria to that?
So for our NHS pension, sort of defining the dependent pension is someone who is dependent on you and is under the age of 23 or over the age of 23 but unable to earn a living due to a permanent physical or mental condition which they were suffering from at the time of your death. A dependent child may include your natural child, adopted child, a stepchild, a child of your civil or scheme partner, a grandchild, or a niece or a nephew. Eligibility conditions apply, which include when the child was born and when you left the scheme. The children's pension is payable for the first 6 months at the rate of your pensionable earnings, and following the initial 6 months, the amount received will depend on the individual circumstances at the time of your death.
Thanks, Angela. So we've talked a lot about the benefits of the scheme, and the death in service benefits are a big chunk of that. I'm going to move on now, and we're going to talk about ways in which you can increase your pension. So Darren, have you got any questions for Angie on ways that you can increase your pension voluntarily?
Yeah, thanks, Verity. I might be interested in the future in actually increasing the amount of pension I've got. What options are open to me for doing that?
So there are a few different options to increase your pension benefits. The first one we'll talk about is the additional pension. So that is something you can do to increase your pension benefits at retirement. In order to do that, you would either pay it in a lump sum or through additional contributions on top of your normal pension contributions each month. On the NHS Pensions website, there is a calculator that you can use to work out how much you want to buy and what that cost will be for you. If you do buy it in a lump sum, there is some tax relief that would be involved in that. The next one is the Early Retirement Reduction Buyout, which you might have heard as ERBO. That is something that is a popular feature of the 2015 scheme. What that allows you to do is basically buy down your normal retirement age. So no lower than age 65, but you can buy up to 3 years. So if your normal state pension age is 68, you can buy down those extra 3 years now by paying additional contributions. So in effect, you're buying it earlier to reduce your normal pension age. You can only buy 3 years, and the lowest age you can buy it to is 65, but that is another option for you. If you want to have a look at doing that, again, head over to the website. There's an expression of interest form that you can complete. You do need to get that application form in the first 3 months of you joining, or between April and June.
So with ERBO, for me, as the host just listening to what you're saying, it sounds like you are buying yourself an earlier pension age and you're retiring early, but you've already paid for the reduction and you were paying for it all the years previously that you were just an active member of the scheme. Is that about the gist of it?
That's exactly right. Yeah, you're basically buying down yourself an earlier retirement age. So if you do that and you go at 65 instead of 67 or 68, there won't be any reduction to your pension because you've paid for it in advance.
Yeah, so in my circumstances, I will be retiring at 67 normally, so I could buy out those 2 years to go 2 years early at 65 and have no reduction to my pension.
That's exactly right, yeah.
Great, thank you.
It's probably a popular option for members that have got service in the 95 section, because the normal pension age for that section is 60. They're sort of making the ages closer together, so the reduction might not be as big.
Exactly. For myself, I've got membership in the 2008 and the 2015 scheme, so I've got two different normal pension ages. One's 65 and one is 67. So effectively, I could buy down those 2 years in the 2015 scheme and take them both at age 65, but my 2015 scheme wouldn't be reduced. There are other two options that aren't as popular, but there is information available on our website. That is your money purchase, additional voluntary contributions, and finally stakeholder pensions. The only thing I would mention with them is that they are external providers. We cannot guarantee what that fund or amount of pension would produce. You would have to contact those providers directly.
So having recapped on the benefits of the scheme and the options available to you as a member of the NHS Pension Scheme, you've also got the option to retire early, so you can claim your pension benefit early and there might be a reduction for that. So I'm going to pass over to Darren now if he's got any questions for Angie on that one.
Yeah, thanks, Verity. Yeah, as Verity said, there is the option, I believe, to retire early.
So, yeah, there are different things that we can offer for members that want to retire early. Obviously, if you do decide to retire early, your pension would be reduced. But you do have that option then to retire and return or partially retire. So there are flexibility options available in and around once you reach your minimum pension age if you do want to take your pension benefits early. We did discuss a lot of this information about early retirement on one of our earlier podcasts. I think it was episode 2. But again, there is also information available on the website if you want more information about early retirement, including the factors and how much the reduction may be dependent on how old you are when you decide to take that pension.
One of the benefits of being in the NHS Pension Scheme was some members hold something called special class status. Now, we've mentioned it in episode 1 and 2 very briefly, but I wanted to really dig down onto that and find out what exactly is special class.
Okay, so special class status applies to certain groups of members who were contributing to the NHS Pension Scheme before the 6th of March 1995, so quite a lot of years ago now. Special classes included nurses, physiotherapists, midwife and health visitors. For members that had this status, it allows them to claim their 1995 pension benefits at age 55, subject to the relevant criteria being met. However, if you did join the pension scheme after the 6th of March 1995, this will not be applicable to you. I just want to mention there, Verity, as well, that any members, obviously members are all now in the 2015 scheme, so any members that had that special class status in the 1995 section can still retire at age 55 as long as they're in that special class role at the point that they reach age 55.
So finally, we must touch upon transferring in and transferring out. Now, you can find out more information on those topics on episode 1 of our pensions podcast. With those topics, Andrew, is there any key information anybody would need to know?
I think the most important thing to remember, especially with transferring, is the timelines are very, very strict. You must apply to transfer into the NHS Pension Scheme. So if you're outside of that 12-month period, unfortunately, you won't be able to transfer it.
Great, lovely, thank you. So let's head over to the questions now. We do have some more questions. We've got some from Darren and some of our other members have contacted us for questions. Darren, I'm going to head over to you to get us started.
That's great. Thanks, Verity. Yeah, I've just got a question about the nominations. So if you don't need to nominate a spouse or partner to actually receive your benefits, how does the NHS Pensions know where to pay that money to?
Okay, so your employer would fill in a death in service notification form and send that through to us at NHS Pensions to provide us with all of the details that we'd need if there were any death benefits payable. So any beneficiaries or dependents that you have, your employer would let us know so we could then process them and put them into payment.
Great, thank you. One of the questions I had, it was quite similar actually. It was from one of our members called Cece, and she wanted to know, she's lived with her partner for 20 years, but they're not married.
Yeah.
Does she need to nominate him?
She does, yeah. She needs to head over to the website and onto the My NHS Pensions portal and complete the form that they need to nominate.
So there's an option for these members to be able to make these nominations without even contacting us. They can fully self-serve using the portal.
They can, yes.
Great, lovely, thank you. Next question is, we've got Phil who's been in touch. Can I nominate a sibling to receive my death in service pension payment?
You certainly can, yes. You can nominate as many people as you like or one organisation such as a charity. It can be children as well. There's no age limit for who you put on your nomination forms.
Lovely. So as we've talked about nominations, I did just want to clarify something. So when we're talking about the lump sum on death, you can nominate anybody for that, or an organisation, as you've said.
Yeah.
But when we've also discussed the word nomination when it's come to the adults' dependents pension, because ultimately there are two different benefits when it comes to death in service.
Information is available on the website about who is eligible to receive any adult dependent or children's pensions in the event of your death.
Great, thank you very much. So let's summarise the things we've talked about today in the podcast. We've talked about the benefits of the scheme. Now, your main benefit of being in the pension scheme is ultimately that pension at retirement that is backed by the government and it's guaranteed for life. It rises in line with the cost of living as well. And so that's always something to keep in mind. Every time the payment comes through, the pension payment, we are keeping that up to date with the cost of living and CPI. There's that ability to increase your pension as well. Darren discussed earlier about ways in which he can increase his pension. And Angela mentioned things like additional pension and the ERBO. And obviously that is a mouthful. So just to remind you, that's all about buying yourself an earlier pension age. We talked about the flexibility. There are flexible ways in which to retire. You can retire and come back to work. You can partially retire without taking 100% of your pension. There's also the death in service benefits, which we've talked about at length as well. There's ill health benefits. So if you became too ill to work, you would be able to take your pension under ill health benefits. Everything we've discussed today does come with criteria. Everything we've discussed today is on our website as well. And don't forget, there's options to transfer in and out, which we just touched on before we finish. That brings us to the end of today's podcast, and I really hope you found it useful and informative. Please don't forget, if you've got any feedback, you can email that to us at stakeholderengagement@nhsbsa.nhs.uk. And if you need any more information about what you've heard today, you can access that on our website, or you can sign yourself up to the My NHS Pensions portal, which allows you to self-serve, access those estimates, and you can also have a look at your nominations form. So thank you so much for joining me today. Please don't forget to subscribe to the podcast platform you're on today for more episodes. Thank you very much, everybody. Goodbye.